Okay, let's have a look. Tigers are Lurking Proprietary Limited balance sheet at the 30th of September 2018. And we're given some assets and some liabilities and equity. And we've also got a income statement for the same period, or the period ending 30th of September 2018. We've got some additional information. Alright, so what we're required to do is we need to prepare the operating statement of a cash flow section. We'll get that on screen. As at the 30th of September using the direct method. Alright, now when I'm producing an operating cash flow, I'm looking at my current assets, which is this section here. So that's my operating. These items here are my investing activities. If I look at convertible notes, now is my convertible notes in 2018 convertible redeemed for the carrying amount of cash. They were deemed into ordinary shares. My convertible notes, I think, are a long-term item, so I don't need to worry about those. So that's non-current liabilities and equity, which are financing activities. This is my operating activity here, which is accounts payable, and pretty much everything in here is my operating activities. There's a couple of differences. First, we got a loss on the sale of equipment. My loss on the sale of equipment is a non-cash item. We've got operating cost of sales, interest expense, profits before tax, income tax. So the loss, anything, when you see words like loss or gain or profit, it means that it's non-cash. Now, operating expenses included depreciation of $11,500, so that's an important piece of information because I'm going to have to make an adjustment to that. I'm just going to highlight that number to remind me. Land was sold at, so this is going to affect my operating. Land was sold at book value for cash, so that's an investing activity, so I don't have to worry about that. I can tick that as being done. Cash dividends, that's financing. Tick that as being done. Interest expense of $4,200 was paid. Interesting. There's no interest payable, so it looks like that interest expense there is all good to go. So that's an operating activity. During 2018, equipment costing $1,400 with a book value of $12,000 was sold. So equipment's investing. In 2018, convertible notes were redeemed for their carrying amount of cash. So convertible notes of $10,000 were converted into ordinary shares. That's financing. Ordinary shares were issued, shares are financing. Accounts payable pertain to inventory supplies, okay, that's good. So that's my operating thing, so I know all my accounts payable is inventory. There was no tax payable at the end of the period, that's another operating, so those last two are operating. No tax payable, so we can assume that that tax expense was all cash. And the same for my interest. Okay, let's go. So it says prepare the operating section of a cash flow statement. Cash flow for Tigers Lurking Proprietary Limited. Cash for the year ended what are we looking at? 30th of September. Alright, now we're looking at operating activities. Now before I even do any of that, I've got to start to reconstruct my accounts. So the first account I'm going to reconstruct, I'll just flip my page over, is we're going to tick off these cash accounts, and I want to look at my accounts receivable. Try and work out the cash flow through my accounts receivable. We start with an opening balance of $9,100, which is my open, and my closing balance is $23,800. So I can tick that off. $23,800. Now what increases my accounts receivable is my revenues. So I've got $311,500 here. And that's my revenue. And I'm going to do what's called balancing the accounts. What's the 320,600. And this will help us indicate how much cash goes through. I'm going to use my calculator. 320,600 less, what is it, 23,800 equals 296,800. And that's my cash collected from my customers. So I'm going to highlight that because I'm going to put that into my cash flow statement. My next one I'm going to look at is my inventories. Can we see over here? Yep. Now what we're going to do is we're going to try and determine what our purchases are. My opening inventory was 0. My closing inventory was 18,900. Now what increases my inventory is purchases. We don't know that yet. But what decreases my inventory is my cost of sales. So I can go over here and put in my cost of sales of 162,750. And I've got 162,750 plus 18,900 equals 181,650. So that must make this 181,650. So therefore my purchases must be also 181,650. And I can tick that off. Now I'm going to look at my accounts payable because I'm going to use that purchases figure in my accounts payable. Tick off, tick off. Where are we? Accounts payable. Now I'm onto my credit side over here. So where's my accounts payable? Opening is 14,000. And my closing is 8,050. Okay. Where are we now? My purchases come down to here. So I've got 181,650. That's my purchases. And cash paid to my suppliers is the difference. So let's have a look. I've got that figure still in my calculator. Plus 14,000 equals 195,650 of 195,650, and I'll deduct off that my 8,050. Gives me a cash paid of 187,600, and I'm going to highlight that because that's going to go into my cash flow statement too. Now I'm going to look at my operating expenses and interest expense and my income tax expenses. So cash and cash, so that's okay. So those two figures I don't need to do any other calculations for, but I've got to look at my operating expense. Operating is how much? 77,350. And I recall something about dividends. Operating expenses included depreciation. Okay, that's what it was. So that figure there, I've got to deduct 11,550, which is depreciation. So that should then give me a figure of, what do we got? 77,350 less 11,550 gives me 65,800, and that must be my cash paid as well. So once again, highlight that so that I can put that into my cash flow statement. Now there's a lot of other items here. Interest expense was 4,200, so I'm going to recognise that one and that one as being needed to go into my cash flow statement. And I think we're almost there. Operating. No tax payable. I've ticked off revenues. That will get ticked off as well. That's just a total, that's just a total, that's a total. So yeah, okay, we're ready to go. We're ready to put our cash flow statement together. Get the right page. So I got my operating section of my cash flow statement, and the first thing I'm going to have is cash collected from customers. And my cash collected from my customers was 296,800. 296,800. Cash paid to my suppliers, I'll just abbreviate to paid to suppliers. Which is 187,600. 187,600, and I'm going to bracket that figure so when I go to add later I know to subtract that from other figures. What else do we have? We had operating expenses. And what is my operating expenses? 65,600. 65,800. I thought that was wrong. And then I'm going to put in my interest expense, or interest paid. Which is 4,200. And once again, that's a bracketed figure. And my last one was income tax paid. Which came in at 22,750, once again a bracketed figure. Alright, so let's add all these up. 296,800 minus 187,600 minus 65,800 minus 4,200 minus 22,750 equals 16450. And that's my operating section of my cash flow statement. Oops, let's just slide that up there.